Did your dinar or dong investment just crash overnight? You're definitely not the only one. Millions of currency holders around the world woke up to some shocking numbers this morning. Both the Iraqi Dinar and the Vietnamese Dong, currencies often tied to big hopes and speculation, have just taken one of the hardest hits we've seen in years. Many are already calling it the 2025 currency shock. Markets across Asia, the Middle East, and even parts of Europe are reacting fast. Social media is filled with panic posts and currency forums are flooded with confusion. But before you freak out or make any quick moves, take a breath. Because in this video, we're breaking down what really happened, what's behind this sudden crash, and what it means for your investment going forward. Whether you've held dinars for years or just started stacking dong this year, this breakdown could completely change how you see the market. So let's dive into the numbers everyone's talking about. The Iraqi dinar has dropped roughly 30% in just a week, a massive slide almost no one saw coming. The Vietnamese Dong, while a bit steadier, still fell around 25%. For a lot of investors, that means their portfolio just lost a third of its value overnight. Exchanges in Dubai, Istanbul, and Ho Chi Minh City are seeing crazy sell orders as retail traders rush to unload. Even major dealers are running into liquidity problems from all the sudden sell requests. This isn't a small dip, it is a full-on market shakeup that is rippling through emerging economies. So what caused it? Politics, oil, inflation, or something even bigger? Let's break it down. To understand why the dinar suddenly tanked, we've got to start with Iraq's economy because everything circles back to oil. Iraq gets nearly 90% of its government money from oil exports. Lately, oil prices have been swinging all over the place thanks to global tensions and shaky demand. When oil prices drop, Iraq's budget takes a hit, and that makes investors nervous. They start doubting whether the central bank can keep the dinar stable, and that fear leads to heavy selling. On top of that, budget delays and political disagreements have only added fuel to the fire. All of this falling oil prices, messy fiscal decisions, and tighter global monetary policy came together to create the perfect storm. But that's only half the story. The other major factor sits outside Iraq. The US dollar. The Fed's latest moves have pumped the dollar to its highest point in years. And when the dollar surges, smaller and emerging currencies usually fall. Why? Because investors start shifting their money back into safer US assets to chase better returns. Picture a global seesaw. When the dollar side goes up, the other side, including the dinar and dong, goes down. This trend isn't limited to Iraq or Vietnam. It's happening in Turkey, Egypt, and other developing markets too. But for currencies like the dinar and dong, which already carry a speculative label, the impact hits harder. Now, switching over to the Vietnamese dong, Vietnam's been one of Asia's top-performing economies over the past decade. Strong exports, major foreign investment, and a booming manufacturing sector. But even a fast-growing economy can't dodge every global shock. Vietnam's factories depend heavily on orders from China, the US, and Europe. With China slowing down and Western demand cooling, Vietnam's export growth has taken a hit. Meanwhile, inflation at home is creeping up. The central bank's been trying to walk a fine line between keeping prices under control and supporting growth. But constant rate hikes around the world have made that almost impossible. These combined pressures have dragged the dong down sharply, and investors are starting to feel the sting. Now, a lot of retail investors are asking, is this the end or a buying opportunity? Historically, the dinar and dong have been viewed as long-term bets, currencies that could rise as their economies stabilize. But when you get short-term chaos like this, fear takes over fast. Some experts say drops like this are just part of the cycle, natural corrections in speculative markets. Still, it's important to remember that currency investing isn't like stocks. There are no dividends, no guarantees, just price movement. And when that movement turns against you, it hurts. The key is staying calm, understanding the bigger picture, and not letting fear control your money decisions. Behind the scenes, the big players, hedge funds, institutions, professional traders aren't panicking like the retail crowd. They're watching data. Things like Iraq's oil output, Vietnam's inflation numbers, and the US dollar index. They know short-term panic can create long-term opportunity, but they also know the risks. Iraq, for example, has been improving its oil infrastructure and building new trade connections. Vietnam keeps benefiting from global companies shifting manufacturing away from China. Those are signs of potential recovery, even if it's not immediate. But patience is key. None of this turns around overnight. Let's take a deeper look at Iraq. Despite political issues, oil production has been trending upward. The country has been modernizing refineries and adding new export routes, all good news for long-term strength. Still, Iraq's economy has big problems: corruption, oil dependency, and slow diversification. Global energy demand dips. Iraq feels it instantly. And in 2025, the energy market is still all over the place thanks to shifting alliances and environmental pressures. Iraq's juggling reform and global uncertainty, that's the real weight behind the dinar's fall. Vietnam's story is different but comes with its own hurdles. Inflation, especially in food and energy, is steadily rising. The government's tightening credit to cool spending, but that's slowing down small businesses and everyday demand. Recent export numbers also show slower growth compared to last year. Investors are watching closely. Will the government ease up to boost growth, or stay strict to fight inflation? Each move affects the dong differently. On the positive side, foreign money is still flowing in, especially in tech and manufacturing. That long-term strength could help the dong bounce back later, but for now, things are rough. So what should everyday investors do? First rule, don't panic. It's natural to feel anxious, but reacting emotionally usually locks in losses. Ask yourself, has the reason you invested changed? If you believe in Iraq's rebuilding or Vietnam's manufacturing future, those fundamentals are still there. But if your situation's changed or you can't handle more swings, it might be time to rebalance. Smart investors are taking this chance to check their portfolios, diversify, and make sure they're not too heavy in one risky area. If you're thinking about buying during this dip, be careful. 30% crash might look like a steal, but currencies can fall even more before they stabilize. Timing this market is almost impossible, even for the pros. If you're still tempted, treat it as high-risk money funds you can afford to lose. The goal isn't to gamble, it's to position smartly. Some investors average in by buying small chunks during dips to lower their overall cost. Others wait for signs of recovery before making a move. Either way, patience wins. The key is understanding that markets move in waves, not straight lines. Now, let's talk about one rumor that keeps coming back: the overnight revaluation story. You've probably seen it online. Claims that the dinar or dong will skyrocket in value overnight. These stories have been floating around for years, but they're just that, stories. Real currency reevaluations are extremely rare and only happen under very specific government and international conditions. What we're seeing now is a normal market correction, not a secret RV event. The best investors focus on facts: global rates, oil prices, trade flows, not hype. Most analysts agree that volatility will stick around through the rest of 2025. The same global forces behind this drop, a strong US dollar, weak oil prices, shifting trade patterns, aren't disappearing anytime soon. Iraq and Vietnam both have to adapt fast. Iraq needs to keep reforming and reduce its oil dependency, while Vietnam has to manage inflation without losing investor confidence. Both can pull through, but it's not going to be quick or easy. For investors, that means getting ready for more ups and downs before seeing a real rebound. So what can you do right now? Start by reviewing your portfolio. If too much of your money is sitting in speculative currencies, spread it out, maybe into bonds, index funds, or commodities. Stay informed, but don't obsess over daily price swings. Focus on big picture updates, economic policy, oil trends, and the US dollar index. And if you're feeling unsure, talk to a financial advisor who understands Forex risks. They can help you create a plan that fits your goals and comfort level.